Hello everyone, welcome to PSA Investment. Introducing you to a new analysis program on wealth growth and risk management. This program aims to develop strategies on how you can build your wealth. Together with that, the program will be developed upon in episodes. So I advise you relax, pay attention, and learn to grow your wealth. What if I tell you your salary is not too small? Your saving strategy might be the problem. Let me show you a better way. But before we dive into this, investment decisions are personalized. Likewise, if you seek any financial advisory service, you can check out my bio, then reach out to me so I can help you recommend a savings plan. To start with, we are looking at a very simple investment option, which is fixed interest earning. This fixed interest earning, we are going to be using example and case studies from Nigerian markets, whereas the formula that we are using in this strategy is actually a compounding formula for this fixed interest income. And what are these variables? What do they stand for? The first variable, which is the FVIF, holds the future value. So for me to determine the future value after a specific period of time, it depends on my monthly contribution, which is the part of the salary saved monthly. Then I have the rates, that is the interest rates that is charged on my savings monthly. Likewise, I have the number of months that I'm investing my money. This strategy is actually on monthly investment plan, which encourages savings. So we look at an example. We have the monthly salary, assuming a civil servant earns 200,000 naira. Savings rate is 15% of the owner's salary. Likewise, the monthly savings amount will now result to 50% of 200,000, which is 30,000 naira. Annual return on the investment is 12%. This 12% is the interest rate that your investment will earn annually. Then if you are to look at this on a monthly basis, it will now be the 12% per annum divided by 12 months in a year, which will result to 0.01. And the duration we are going to be using in this example is 10 years, which is 120 months, as we have 12 months in a year. So now let's go into analysis. Still using the same formula, we have the interest rate plus 1, which is 0.01, plus 1 will give 1.01. Then to the power of 120, which is the months, the total months that we have in a year. So that being said, it will result to 3300, 3.300. Then we have the 3.300 minus 1, which we already have here in the formula. After that, we look at dividing this by what we have per month, which will give us 230. That is the essence of this formula here. So after getting that value, we multiply it by the monthly savings that the user is putting into the savings account. So that has an effect of 6.9 million naira. To look at this, you might realize that saving 30,000 every month will result to 6.9 million at the end of 10 years. So how do you determine your profits? Actually, what is saved by the individual is not 6.9 million, but it is 3.6 million, as we have here 30,000 per month multiplied by 12 months, 120 months, which will give us 3.6 million, which total value after 10 years based on our calculation here is 6.9 million. Then determining the interest that is accruing to the contribution, now we have 6.9 million minus the amount that is actually contributed, which will give us 3.3 million. So automatically, while saving 30,000 per month for 10 years, you could actually earn 6.9 million as your total value, whereas the interest earned on that amount is 3.3 million. So this is the power of compounding. Without further ado, let's look at one important aspect, which is the interest amount, which is equal to what is saved simply because of time and consistency. Let's look at a more realistic example from Nigeria um, return, annual return, which we have rate flowing from 15 to 16%. So considering the 15%, if I as a civil servant determine to save 10,000 naira out of my allowance monthly for 5 years, I will be contributing 600,000, as my 10,000 multiplied by 60 will give 600,000. The 60 is determined by the number of months in a year, which is 12, multiplied by 5 years, that is 60, which the total contribution by the user is 600,000. That being said, the interest that will be earned if applying the same formula as we did in the previous example will result to 885,000 naira approximately. Likewise, for a person that contributes 20,000 naira monthly, will save up to 1.2 million, but at the end of the day, the total value of the savings will result to 1.7 million, which is an addition of 500,000 over the period of 5 years. So let's look at the 16% annually. 16% annually, we have 10,000 also, which results to 909,000, comparing to that of 15,000, which is 885,000. So there is a bit increase due to the percentage change from 15 to 16, as we have above here. So considering this savings pattern by individual, you can actually earn up to this amount. Now, realistically, the purpose of this video is to show you how your 100,000 naira saved monthly could actually yield to 30 million naira approximately at the end of 10 years. Now, if you should look at it, we have monthly savings, which is 100,000 for 10 years, will result to 12 million naira. How do we determine 12 million naira? We have 10 years, then we have 12 months for each of those years, which equates to 120 months. That 120 months multiplied by 10, 100,000, we give the 12 million, which is the actual savings by the individual. So if you should look at that, the person actually saved up 12 million over the period of 10 years. But the real value at the end of the 10 years will result to 29 million, which is 30 million approximately, due to the fact that the actual interest rate in Nigeria is 16.25. Though it depends on the platform you are trading with or your savings account, which policy or times do they give or allow you. So you should also look at some of these platform and choose among which of these platform offers you the best return. That being said, we should look at a favorite quote here that says, every month you save a fixed amount, such as 100,000, the money earns interest. The interest also earns interest. Over time, the growth becomes exponential. That is the power of compounding, because the little money today could actually grow to become something significant over time. And I've just seen an example. So I'll just stop with a quote of mine that says, you don't build wealth by saving once. You build wealth by saving consistently and allowing time to do the work. So thank you very much for your time. That is all I have for you in this episode, which is what fixed income earning. How you can convert your fixed income salary, ensuring consistency savings pattern, and the result you could have at the end of a particular time frame, such as 5 years or 10 years, which is a long-term investment. In subsequent video, we'll be looking at how you can also increase your earning or wealth over time on other type of investment and assets. Follow our YouTube channel and our community in order to get more updates on more strategic analysis. Thank you. That is PSA Investments. I remain your humble host, Salami Abdullahi.